I woke up early this Sunday morning and I thought back to a comment that I made in a prior video this past week about you need to be watching India and its opportunities. I actually spoke of India quite some time ago, and the one that really stands out was the video I did on July 17th, 2000. And I want to show you what's happened since that time and give you some perspective as to what is possibly going to happen in the future and how you can profit from it. Not only from India, but understanding the whole world's interrelationship relative to investing. This is a chart, a trading views chart that I put together. It's my chart for basically anticipating and projecting when the 2024 crash is going to occur. But I wanted to adapt it to relate it to the overall investment environment in the world. And what I'm showing you here is, again, this is the S&P 500, the lines of red and green. And then what I'm showing you is the China ETF. That's actually this yellow line. And you see they all start together back here in roughly November of 2012 and move kind of in tandem. China gets ahead of the U.S. market sometimes back in January of 18. They all react to the coronavirus. Some in more dramatic than others. And then you see China really hitting a peak in February of 08 and really outperforming the S&P and outperforming the Chinese. And then we cross a line. And here you see China intersects with India, and the power moves. The emphasis moves, and the world has said on July of 2021, we're exiting China, and the door opened in India. And you can see they move almost opposite of each other, China having more dramatic moves than India and less dramatic moves than the United States. But then you'll see here, China did not take the upturn in October of 23 as India, both India and the S&P did. And so if you go all the way back, as I said, to 2012, China, if you invested $1,000 there in 2012, you'd now be up 6%. Whereas if you had invested it in India, you'd be up 135%, and if you put it in the S&P, you'd be up 238. Now that's pretty interesting. It gets more interesting. Let me share a little bit more with you. Here, what we've added is that blue line, and that's the QQQs. That's if you had invested in the ETF QQQ2 rather than in the S&P in India or in China. So we had the S&P up 238, whereas the QQQs is up 579. What I want you to see here is the dramatic reaction to both upturns, like here, and downturns. So when you're when you're winning, you win bigger. But also when you lose bigger. Here again, we had in November a move up. Both India and the S&P moved up, but the QQQs moved up more dramatically. Why I share that with you is I believe that the commercial banking crisis, the debt we're carrying, the interest rate inversion that we have, the lowering of interest rates, which always tells us when interest rates come down, the markets come down as well. The QQQ is going to be more dramatic. That's my belief. Now, I want to show you how it's even more dramatic. Let me show you Apple. There's Apple relative to the others that we have, and how they're even more dramatic. This is, let's just focus on where we come out of the coronavirus. And yeah, the QQQs did real good, but look at Apple. my caution to you is look at that. When they go down much more severely. Now, that should give you some cues. Let me open your eyes just a little bit wider. You know what that is? That's NVIDIA. That's NVIDIA. If you had invested in NVIDIA back in 2012, you'd be up, what is it, 23,839%. Wow. As opposed to the S&P 245%. Again, recognize that is a tremendous surge since October 2022. Expect, if the market crashes, an equal amount of drop. When they turn on you, they turn on you. Okay? Even here, look at how far when it came down from November of 2022 to October of 2022, its drop is substantially greater than probably any other stock I could put up here. So I come back, what's the takeaway? The takeaway is, I believe, that the market is way overvalued. And there are parts of it that are even more overvalued than other parts. And I think this pretty much gives you the cue. I think the other thing it tells you is China's dead. That's a dying economy. It started its death back here in, in July of 2021. The doors closed at China, and the doors opened in India. You're not going to get the kind of growth that you'll get in the U.S. or in the NASDAQ, but again, you aren't going to have the severity of the correction, of the, I don't know a worse word to put on it. And I think I've been doing some surveys on YouTube, and I hope those surveys are helping bring into focus what's happening. Those smiley faces are the videos that I've done on this move from China to India, and they on this move from China to India, and they actually start all the way back on May 25th of 2020. Then I follow one with June the 1st of 2020, and then we go July 17th, 2020, and then we jump up into 2022, where I do a series of videos, where I've done a series of videos on my belief that India is the place to be. It's interesting that first one really was relative to something I just did a video on Facebook, is Mark Zuckerberg's recognition of how he could expand his TAM, his total addressable market, by making internet available very economically to China or to India. And he recognized as he did that, he would grow his Facebook, his WhatsApp, his Instagram followings in India as well. And it has paid off handsomely for Facebook, and it's paid off for those of you who back on May 25th, 2020, watched my video, recognized that, hey, he's on to something. You got some pretty good growth from May of 2020 to January of 22. Had some leveling off, and now, as you can see, it's just slightly above where it was there. I'm not suggesting that you buy INDA today. I'm suggesting that once we go through this correction, this reset, and as you can see here, it is not peculiar to any part of the world. When it resets, okay? Now, the commercial loan crisis is going to affect the U.S. much greater than it will India. But there are other places, safe places, that you can put your money that we talk about on our Friday Stock Talk and that we're tracking regularly. Because as this false exuberance over AI takes the QQQs even higher, once that crash comes, our safe place is going to really give us some handsome returns until we get to the bottom of the correction, and then we come back to the QQQs and to the Amazons and the Googles. Is this timing the market? Hell yes, it's timing the market. When this crash occurs, it could take 3 years to come back. And if you've got the data and you know how to read it, and you know how to understand it, and you can create charts like this, and then say to you, it's obvious. If there's a hurricane coming, go to your safe place. Buckle down. Put wood over the windows. Even leave the city and go north. Why wouldn't you do that? Well, that's the same way I believe you should manage your money in the stock market. If you've got access to the data and you know more than 95% of the people playing the game, and I'll guarantee you 95% don't have a clue because they just listen to the talking heads and they're saying he isn't going to lower interest rates, not this week, he'll do it sometime later. They don't have a clue. And what they don't know is when he does, the bottom's going to fall out. The toilet's going to flush. And if you're sitting on the toilet, you may go down with it. Okay? Be aware. Find someone who can help you. I have a group of about 1,000 people who help me. We meet every Friday and we talk. And we share. We share life experiences. People step up and say, I'm in this industry. This is what I'm experiencing. We had a guy from AT&T. We had a major manufacturer. We had a doctor. We get so many other opinions that we gain an advantage. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I'm 79 years old. I take NMN from a company in the Netherlands, the largest supplier in Europe, because it's not available in the United States. And that's how I get all this energy. Here, I'll show you. This is it. This is NMN, and it's from PUROVITALIS. Look it up on the internet, and I'll guarantee you'll have as much energy. I've been taking it for 3 years. All right, I got to go. It's Sunday afternoon or Sunday morning, and Nita and I have some plans. You have a good week, and look at these charts. Understand what is happening. Understand that actually the S&P is increasing at a faster rate over the last 40 years than our national debt. And I'd ask you, is our national debt out of control? I think 90% would say yes. Well, if the S&P is outpacing our national debt in growth, is the S&P out of control? I think so. What do you think? Why don't you join us Friday? Get on the bus and I'll see you there.